What's up guys, Ben here and welcome to Motivation to Invest. We've all heard the phrase, Google it. But despite this, many investors still seem to overlook this tech giant. Google is the #1 leader in internet search. They also own YouTube, where you're watching me right now. In addition, they own the Android mobile operating system, which is used in Samsung. They also have a range of diversified bets, such as Waymo, the autonomous driving system. Recently, Google, or to go by its parent company name Alphabet, has had some bad press. So could this be a great time to invest in the stock? Well, in this video, we're going to find out as I deep dive into the headlines, the numbers, and the business model. Be sure you guys watch till the end to find out whether I personally have bought more shares in Google. If you're ready for that, let's dive in. Welcome back guys to Motivation to Invest. If you're new around here, feel free to subscribe if you want more investing tips and exclusive stock picks, which I personally am investing into. And if you appreciate the hard work which goes into these videos, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm. With that being said, let's dive in to the headlines. According to this report, the Justice Department is actually suing Alphabet's Google on antitrust grounds. The lawsuit seeks at least $5 billion and accuses Alphabet of collecting data when it shouldn't have. This includes what people view online and what they browse, despite being in Google's incognito mode. According to the complaint filed in the federal court, Google gathers data through Google Analytics, Google Ad Manager, and other applications, and website plugins, including smartphone apps, regardless of whether users click on Google-supported ads. This helps Google learn about users' friends, hobbies, favorite foods, shopping habits, and even the most intimate and potentially embarrassing things. Google cannot continue to engage in the covert and unauthorized data collection from virtually every American with a computer or phone. Jose Castaneda, a Google spokesman, stated, "As we clearly state each time you open a new incognito tab, websites might be able to collect information about your browsing activity." Allegations like these are not new to Google, and they also affect other tech giants such as Facebook. This was clear when the tech giants had to defend themselves against Congress just a few weeks back.
Please state your name and title to the committee.
I'm Mark Zuckerberg, CEO of Facebook, a perfect website that has never done anything wrong.
Mr. Zuckerberg, how do you respond to people who say your company has grown into a monopoly?
I don't see Facebook as a monopoly. We want other social media platforms to succeed. We just want their success to be under the Facebook banner and all the money they make go to Facebook.
But you know what they say, when there's volatility, there's opportunity. So despite these factors, could this be a great opportunity to invest in the business? Has the business fundamentals changed, or is it still an exceptional company to invest into? Google makes the majority of its revenue through digital advertising and is the #1 leader along with Facebook. However, when the global health crisis hit, businesses scaled back their ad spending and thus Google's revenue took a major hit. However, with the economy starting to recover and people starting to spend money again on ads, Google's revenue should be looking to increase again and definitely in the future. So what do the fundamentals look like for Google or Alphabet? Ticker symbol GOOGL. Well, I'm going to deep dive into the numbers right now. I'm going to be using a platform called Stockopedia. This is a platform I use to analyze stocks and I find it really helpful. If you guys wish to check out the platform, I've actually got an exclusive 25% off discount link, exclusive only for the viewers of Motivation to Invest. So if you wish to try that out, I'll leave it in the link below and you can see if it fits your investing style. So let's dive into these numbers right now. So on Stockopedia, the thing that I love about it is every stock is given a stock rank. So a stock rank allows you to quickly look at a stock and see whether it's a good buy or a good sell. So in Google's case, it has a stock rank of 86. And companies with these great stock ranks have been proven to outperform the market statistically. So Google currently has a stock rank of 86. The momentum behind the stock is also 86. Value 34, quality 97. Now I know what you're saying to me, Ben, the value score isn't very high for Google. And correct, it isn't. This is a major tech giant, one of the most popular companies in the entire world. However, if you compare this to a company such as Amazon, this valuation is pretty sweet. Diving into the share price for Google, we can see back in March it reached $1,000 a share during the March lows, during the crash. Since then it increased by 60% to highs of around $1,700 a share. Now it's back down to $1,400 a share. For such a massive company, this is nearly $1 trillion company, you'd expect it not to be growing at a very fast rate, but you'd be wrong. The compounding annual growth rate on Alphabet's revenue, an average over the past few years, including its 2020 prediction, is 19.7%. Now, usually, I consider a growth company to be a company which is growing at least, say, 20% a year. Google's doing that, but more amazingly, for $1 trillion company, this is just completely mind-blowing, how it's still managing to grow at these levels. Now, there has been talk that Alphabet's growth has been slowing slightly, but still, any growth at these levels is incredible. Operating profit, $32 billion in operating profit. Now, this kind of cash generating machine is just tremendous for investors, as it means it can continuously keep putting this cash to work in new acquisitions and investments. Revenue is forecast to increase for 2021 and 2022, up to $208 billion in revenue. Net income is also forecast to increase, up to $38 billion in revenue by 2021. Then we have earnings per share, which is also forecasted to increase. Analyst consensus, we've got people here from Deutsche Bank, JP Morgan, 4 hold, 22 buy, and 11 a strong buy. So analysts are very bullish on this stock. And now this is my favorite bit, and this was one of the reasons I first invested into Alphabet. This company has a tremendous amount of cash. So generally, looking at the current ratio, I look for a business with a current ratio of at least 2. That means the company can pay off its short-term debts at least twice. Alphabet, current ratio, 3.41. Wow, that is just mind-blowing. Again, tremendous amount of cash on hand to weather any storm by any health crisis which comes. Also to continue investing into new projects, such as Waymo, the autonomous vehicle. Onto the valuation, price to book value 4.62, P ratio 26.4. Now, as mentioned previously, this is still quite a high valuation, but if I compare that to, say, Amazon, it's a lot better. To me, this business is the best value tech titan at the moment. Some analysts view YouTube, where you're watching me right now, as a catalyst for the Google stock to grow even more. To me, YouTube will be a replacement for television, and it's already going that way. Bank of America forecasts that YouTube subscription business will reach $18 billion in revenue by 2025. Others view YouTube's growth as already built into the valuation though. Due to its huge cash holdings, Google's stock has shrugged off 3 fines totaling $9.3 billion levied by the European Union on antitrust grounds. Now, the issue I see with these fines that are coming out from these governments is they'll think Google's this big cash cow, and if one government manages to get $1 billion, another will say, well, we should get $1 billion and we should get $1 billion. And that could mean a tough time for Google in the long term. However, if it can manage to shake off these and move forward and defend itself well in court, then it should be okay. And it does have plenty of cash and plenty of revenue to pay even these gigantic, unspeakable fines. However, the recent battle with the Justice Department could be an issue, as it may force Google to restructure the business, or it will mean another hefty fine. Now, this is the major risk for investors with a company which is so well established and so well formed. Many say Alphabet is a monopoly, and personally I do agree, but don't tell the Justice Department that. Google's cloud business is also growing rapidly, and is on track to move the financial needle for Alphabet even more. Q2's revenue, it jumped by 43% year over year. For example, with Amazon, its cloud platform makes up a large percentage of their revenue. Although the division growth slowed from 52% in Q1, the deceleration is understandable, and growth is likely to be accelerated for Q3. Many investors also don't realize the market share of Google's cloud platform. Google Cloud actually has the third largest cloud platform at 9% market share, which is half of what Microsoft has. This is still a substantial share of a massive market. Then we have the self-driving vehicle unit Waymo, which continues to advance and is likely only a year or two away from generating meaningful revenue, which could boost Google stock. Waymo started testing 13 autonomous trucks in the Dallas area. Given the US shortage of truck drivers, these autonomous trucks could be a great opportunity for Waymo. So am I buying Google stock? Well, surprise, surprise, I already own Google stock and I did a video about it months ago. However, I am buying more Google stock. Google is the type of stock which you can just dollar cost average in. Looking at tech stocks at the moment, I like Amazon, I like Microsoft, I even like Facebook, but Alphabet is still the best value tech giant right now. And if you look at the market caps of these companies, Google's market cap is less than $1 trillion. Microsoft's is over $1.5 trillion. Amazon's is over $1.5 trillion. So what does that mean? Well, the bigger you get, the harder it is to grow. And Alphabet's actually the smallest company in terms of market cap at the moment out of those three tech giants. So it means it could have great potential to grow in the future. And now you guys may ask me, what's the best way for you to invest into Alphabet or any other stocks I mentioned on this channel? One of my favorite platforms at the moment is eToro. So I'm going to dive into eToro now and you can take a look. Right guys, so here we are now in eToro. Now the unique thing I love about eToro is that it has a range of markets and stocks on here, but that's not all. You can also trade crypto, you can trade stocks, you can trade ETFs, and you have something called copy portfolio. So you can actually click here and you can see successful traders who are making big money in the markets, 20% up, 17% up, 23% up, and you can copy them. You don't have to study the market as much as some of these guys have done for the past 10, 20 years, because trading is a profession. You can actually just copy their portfolio and make mega gains on your money. They also have market portfolios which are already put together. So if you want to access the self-driving car industry, you can invest in this portfolio, which will give you Apple, Google of course, Intel, Nvidia, Microsoft, Tesla, and many more in one single portfolio. Then you've got renewable energy portfolios, the four horsemen. This is the big tech giants. That four horsemen it's incredible. I wish 10, 20 years ago, that's all you needed to do, invest into the four horsemen, and you would have made an absolute killing still. But these are still great companies to invest in. Then you've also got gaming portfolios, travel portfolios. All this is on eToro, but that's not all. So if I type in, say, Alphabet, there's actually a news feed for the stock. So eToro is like the trading and investing equivalent of Facebook, except it's actually productive. So you can go on here and you can look what different people are writing about the stock. So someone's wrote here about Trump and TikTok, and you can see what people's opinions are on the stock, if there's any latest news on the stock, if there's any reasons why the stock is down or why the stock should be up. This is all found right here, and you can ask questions, you can comment, and you can interact with an entire community. And this is what's so beautiful about eToro. Right guys, so that's eToro. It is a tremendous platform. The unique things about it, I'd say, are the crypto trading, the copy portfolio, and the social trading. Those are things which you cannot get on any other platform, which what makes eToro completely unique. So do you wish to try out eToro for yourself? If so, use the links below in the description, sign up and see if it fits your investing style. And let me know what you think in the comments below. Let me know what you love about eToro and what you don't love about eToro. Sign up and see what you think. Remember guys, this is a community and we all need to thrive together. Full disclosure for you guys, eToro is a sponsor of this channel, so the channel will gain some small support, which does help with running it and producing more great videos like this for you guys. So let me know your thoughts on the platform and also on Alphabet stock. With that being said, if you guys enjoyed this video and you found some value, feel free to give it a big thumbs up. And if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I will see you guys in the next video. Invest safe.